Good morning. Good morning, everyone. I'm Bagadon at Stock Market Caddy, and today is July 29th. July 29th at about 11 a.m. And we had a little issue there. And hope you're having a good day. Markets are pulling in here a little bit. I have just put on we're still running our program. I'll make a note of that. Let me put that in here. And we sent a little video of it. It's not super active, and bear with me. And I also put on a what we would call a mechanical trade, a manual trade of 5 micros on the MES. I'm a little bit late. I would have liked to have taken that with Swing Machine here. It was at we got to put the time back in here. But let me make a note here. Um, we are running SMC bow tie trading robot on 5 micro NQs on a slow Kagi. So it's not going to be real active. We'll change the type to that. And then I also opted for a little manual trade. Let me get, we've lost our time here again. I don't know why it did that to me, but let me get the timer back in here, which we can do. And we go to show and hide plots. We'll bring up the time again, hit OK. Then I got to make a little bit of room, a little bit more room. How's that? There I see we got make it a little bit more than that even. We'll tighten this up so we can see the euphoria. There it is. How's that? Right in there. And punch that up. Let me save it. Oh, I see what I'm doing here. I'm not able to save it because I got my writing there. So I'll do that at the end of today. Make sure that it's there. And we hope you're having a good day. Let us know if you have any questions. And now the program from yesterday, we're profitable mildly for the week. It's not going to trade crazy. We're easing back into the market. We've been away for about 10 days or so, so we're getting settled back in. And a lot of different things. Whenever you go on vacation, there's things to be done, both personal and business. And so we're getting settled back in. Let us know if you got any questions. You want us to punch anything up, and we'll show you a few things when we get a few other folks to stop by. Any questions, let us know. Good morning, everyone. How we doing? It is Tuesday, July 29th at about 11:30. We just punched up a short time ago and had to be with the AC person. Got a brand new AC system, having some computer issues, but everything is computerized. The cars, the AC, everything. But good service person, good service company, and we're back at it here. And I want you to know that I put on some micros, right? I'm just trying to show you don't always have to be trading minis. You don't. You can trade micros, and you want to find your level, right? And we can help you during the Q School find that level, and much of it's going to have to do with your experience, but also your risk capital. But it has to do with your experience too, right? You don't want to, if you're going to take up surfing, you probably don't want to go out and get yourself, some giant surfboard, and go paddling out into the ocean off of San Diego and think you just gotta, ride the big one. I'm gonna ride it, Don. I'm gonna, maybe, maybe you'll be a natural born surfer, but probably a little bit of skill. I've never been surfing. Susan did as a kid, I understand. She tells me, and would have liked to have seen that. But you got to have some skill. So it's not just your risk capital. You got to have some patience, some discipline, some acquired trading skill, and some risk capital. We continue to run after yesterday. We continue to run the program, the Bowtie Trading Robot with 5 micros and Qs, and it's still running, by the way. And it did have some losses yesterday, but it made them up overnight. We made a video of that. And that's what's deposited the $160 in our account, $159.50 to be exact. No big deal. It's not trading a lot. We're settling back in. We've been away. If it puts on a trade, my position window, you may not see it because I didn't make it that big, but what I'll do is I'll close the MES that I put on. In the MES, I did that is a micro ES contract, and I put on 5 of them. So you might think of that as half of a mini. And that's had a run up of 162 and a dry down of 69. Now I put that on mechanically in sympathy or in the direction of the 5-minute swing machine right here. Unfortunately, though, I wasn't here in the office at 8:25. I was with the service person, actually. So I just got back in, so I was already away, but I decided to get that on. All right, so that's what we're up to. You got to remember there are 24 trading days in a month. 24. There's only 24 trading days. Can't trade on, at least not right now. Maybe Bitcoins and the cryptos, but trading those things in the off hours and the off weekends, that's probably not going to be a very good endeavor because they're not going to be terribly liquid. But if you're trading futures, you can trade on Sunday evening, and then you got Monday to Friday. So you got basically 5.5 days. You got 24 trading days in a month. If you take one day off a week, best day to take off, we think, is Friday, certainly Friday afternoon. That leaves you 20. Okay. All right. If you can pick up 150, 160, $200 a day, if you can, well, that's going to be $4,000 a month. Do you have the patience and the discipline to play for that? Or you got to make it all right now? No, I'm going to make $10,000 today, Don. Okay. All right. Well, we could do that, right? You could do that. Let me show you how, or show you what you could have done. We didn't, right? Because I'm going to trade within, my, skill set within my account, and we're also, we want to show you. Here's the ES. The ES goes short at 825. That's one mini contract. You're up 1300. If you had the firepower and you put on 10 of them, you'd have 13 grand. On the NQ, was at 1005, one of them is 1600. You put on 10 of them, you got 16,000. The banks, they're trading hundreds of these things, thousands of these things. Of course, they have ice running through their veins. It's not their money, it's their clients' money, right? And the people actually trading it, they're the worker bees. And once again, it's not their money. So, but they're trained and they got machinery. So you will need to acquire, your confidence level, and you will. Our members do, and get over that. The money is just a way of keeping score. That's about it. But we actually, what we try to do to get away from the emotion of the money keeping score, speaking of that, we want to use profit factor. Profit factor. And that gets the focus, one of the techniques to get the focus away from the money, so you're not trading greed and fear. Right? So, in any case, we're punched up here on a Tuesday, a beautiful day in Tampa Bay, hot as blazes. I'm telling you what, folks. Normally in the summertime we get to about 91, 92. Rarely do we see 100. And I am reminded, there was a time I had to, when I was working for others years and years ago, I had to go to Scottsdale in the summertime. That was a blast. It was so hot in Scottsdale that I remember the rabbits, we played golf in the afternoon. Oof. When we came up to the tee box, they had the little ball markers there. It was so hot. How hot was it, Don? It was so hot. The rabbits were laying in the shadow of the ball marker. I kid you not. And they didn't move. The poor things. There was just no shade out on the golf course. And I'm telling you, on every, they got like cactus out there. They got no trees. There's no shade. Hot as blazes. And on every tee box, a rabbit, and there were dozens of them. They would each get in their position, and they were just laying. And these ball markers were only like about 6 inches high. I mean, they casted a shadow just big enough for a rabbit to cool himself. That's how hot it was. I felt bad for them. Tampa Bay, that feels like Phoenix in the summertime right now, only with a dew point of around 82. Really, really hot and humid. But we usually get the showers in the afternoon, and that can kind of cool things off, so we haven't been getting those. By the way, I will mention this. Some of these storms that we've been getting have been really violent because of the heat, with lightning. So we will be, just before we went away, we came close. We didn't get hit, but the neighborhood got hit with some lightning. We will, during this period, shut all our systems down. And it may end abruptly. I'll let you know. Right now we're under no threat of that. So, but this is 5 micros running. So we hope you're having a good morning. We'll let you watch. And hope you're cool wherever you be. And it's the price we pay from October to maybe May 1. It is absolutely beautiful. It is absolutely beautiful in Florida. But during these summer months, boy, it can get really, it can, So everyone's got something, right? Same thing with Phoenix. Phoenix is a beautiful place in the wintertime. Probably not so much in the summer. So I hope you are in a great spot. And again, this is just 5 little micros. We put it on just before. I did it mechanically. in sympathy with Swing Machine. So let me highlight a couple of things here. We will be up on YouTube up until, hey, Chris, good morning. How are you? Good to see you. Thank you, Chris, for the scorecard before we went away. I love seeing that. And as you know, shared that. I hope you're continuing to do well. And how's that little program working, Chris? Any other keep us posted. Hey, Ted. Ted, what are you chewing on, man? Bug's chewing. Ted. Oh, he's chewing his nails. Doing very good. Very good. Excellent. Um, we are running here in the background. It's not doing a lot of trades. We're kind of getting settled back in, but we're running the bow tie, Chris, on Kagi, and it's a Kagi 1 minute. Kagi 1 minute. So it's actually pretty slow, and we were running it before, and it was kind of interesting. So we're running it again. And but that trade that you see in the upper left, that is a manual trade, and I took that in sympathy with Swing Machine, 5 micros. We'll show everybody this before this market rolls here. This is a view of a program. This is the Nicholas timing model strategy. It limits the number of letters, so it cropped the Y. And the Nicholas timing model is a daily signal. I choose when I enter the trade. That's totally fine, Chris. Yeah, intuition, instinct, no problem at all. You want to be able to do that. Absolutely. And the Nicholas timing model is a daily signal. The signal does not come through intraday. It'll only fire at the end of the day, but not every day. And when it's running on a chart, it's receiving 3 data streams. The data, for instance, the data stream of the YM, the NQ, the ES, and the Russell are all flowing into the chart. But as well, data stream number 2 is the VIX itself. Data stream number 3 is the yield on the 10-year Treasury. And it will generate a signal to be long or short. And back on June 23rd, it fired long. And that's what you see right here. Now, this is from the signal. Now, I'm not saying that we have or don't have these contracts, but it would be a singular contract. So if you had put on one mini contract here, yes, on the Dow, you'd be up 9,500. On the NQ, you'd be up 28 grand. Now, there's another piece to this, Nicholas, though. What we want to see is the VIX in the opposite direction, because it also has a confirming program running, and we want to see it. So we want to see all four markets long, and we want to see the VIX short. Now back on the 23rd, the VIX was not short, and then it went short the next day. But as you can see on the 18th, we did have around the 18th, the VIX went long, but only for less than 72 hours. Then it went short again, and it reconfirmed. So it can help us gauge whether this market is going to turn. It really can't get by us. Nicholas is a mathematical formula, and I just told you what the data streams are. And we have members that are like, Don, don't tell anybody. I'm okay with it. I'm okay with it because the algorithm that it's running is proprietary, and it's ours. And it's yours if you are a monthly member. You get to see it. An annual member, you get it on your desktop. Now, but there's nothing to see on the chart. I can't see anything myself. It is a mathematical algorithm. Now, we do put on some other things to see because it can be nice to see the horizon or see. And a lot of times we'll use Bollinger's, just to be able to see. But it's not using, the program is not using moving averages. It's not using Bollinger. It's not using any of it. And I'm a little hesitant to say that it is a trend seeker. It isn't. It really is something very unique. Wait a second here. Do we already have that? Did we get into that? Bear with me here. I was talking, so I don't have visibility. Yes, we did. Yes. Oh, dang it. Dang it. All right. Do you see this here? See the Kagi bow tie? I made a mistake, kids. I closed the earlier trade that gave us the profits, and I didn't rearm the strategy. And there it is. Sucker's up $320, $330, 5 micros. Damn it. So I got a decision to make. I can close the MES. Why don't I do that? I made a mistake. All right, so I was trying to do too many things. So I'm going to close the MES by buying it. Then what I'm going to do is I'm going to manually go in MNQU25, and I'm going to short the 5 micros. All right, now they're up 360 and I'm behind, but we made a little bit of money on the thing. Now what I have to do is I don't want to lose track of this, so I need to go into the strategy, which is what I'm going to do, and I'm going to arm it, and I'm going to ask the machine to assume or adopt my real world position. And there it is. Okay. And that's it. It just did it right here. That's what it did. Assumed the real world position. So I kind of goofed. All right. That's all. Once again, when you go away on vacation, business trip, and then you come back to trading, come back in slow. Come back in slow. All right. So let's go back to our intraday. There we go. All right. So now the robot has got control of it, and we have some $411 in our pocket. For the week, we're good. We're profitable, so it's nothing outrageous. That makes sense? All right. Got a little. But that Nicholas can be done any number of ways. You could trade option contracts around Nicholas. You could, and I got news for you. If you bought an S&P call option back when Nicholas fired, back in June 23rd, or the NQ, you would have made 25, 30 grand on an option. Absolutely. Thank you, Triplet, for complimenting Chris. He's doing really well. So isn't Daniel. And if Daniel's out there, good to see you. Um, I feel bad for Ted. I feel Susie says I'm projecting. When we went on vacation, we brought our reversal two settings Kage R reversal two. 1 minute. 1 minute. I set the Kage at 1 minute. It really slows it down. Now there is a little bit of on the back test. There's going to be a little bit of spuriousness, but not a lot. Not a lot. My experience, and I really like it. I really like it. And so it's bow tie. So, but just go slow with it, Chris. Um, we brought Ted. Ted's a 5-year-old golden, and Abby is a 1-year-old golden. And we were with them, of course, every day on vacation, and we just had them. Well, I don't want to say hiking would be the wrong word, because they're goldens, right? I don't really like hike, you know, but we got them in the water. We got them in some cold rivers and streams and some lakes, and they just had, oh God, a wonderful time. So now they're back here, and Abby's fine, but Ted I think is a little depressed. Ted, you bummed out? He was so happy because it was cool. We were up in North Carolina, and it was very it was like mid 80s, and it was cool at night. He was one happy dog. They were both happy. It was great. We were happy. And now he says, "This is hot. This is brutal." I know, Ted. So, you go boy. You go boy. He might need to run out. Let me run him out real quick. I'll be right back. I'm sorry. Okay, everyone. What is nice for us, when we are program trading, I'm not really tethered to the machine. I can move about. I can take the pooches out and get some things done. I don't like to see drawdowns. I don't like to see losses. I mean, who does, right? But I'm not. The machine has control of that trade up there, and I'm just going to let it run. I'm going to let it run. I have confidence in what it can do until I don't have confidence in what it can do. If I have to make a change, I will. Um, but we will let it do its thing, right? And that's where, same thing. Like if you're flying a plane, they talk about, don't listen to the inner ear. You start thinking that you see the horizon too much. You start doing too much of that. You want to be able to fly the plane independently, um, but you also got to, at some point, if you're going to adopt the style of trading, is to trust your instruments as well, right? So I'm going to let it go, and we'll see how I do. If you have any questions. Now, the nice thing, when we show you the Nicholas, it is what it is, right? I mean, I can't backdate the thing. Um, it went long on June 23rd, and again, if you had bought a call option on the S&P back then for 35, 40 some odd days, it would have paid you about 25, 30 grand. Same thing with the Nasdaq. It would have. But you could also use it as a barometer, right? To favor one side or the other. I mean, you could do that sort of thing too, right? So we want to be diversified in what we can do, and diversified in what we can trade, right? That makes sense. So let's just take a look and see. Let's go through Swing Machine. The VIX on a 5 minute is trending, and now Swing Machine is a trend identification. The Nicholas, where I mentioned it's more of an or it is an algo. It is an identifying trend. It's what we refer to as identifying market vibrations, right? So when the market vibrations are very, I got to take this call. I'm sorry. Be right back. Okay, sorry about that. Are you guys getting the phone calls from Mary and Emily for the Trump administration? I keep blocking them. They keep coming through on different numbers. Marion, it's AI. It's just I can't get them off my phone. They call every day, a couple times a day. It's an AI voice, but the market vibrations. Um, when the market vibrations, and they really are vibrations, when the VIX gets compressed, when the yields are compressed, the environment for money to flow into markets goes up. And it's going to do that a lot. It's going to do that a lot. The reason being is the asset gatherers, namely the banks in New York, that's the environment that they want, right? They want everybody working, right? It sounds very altruistic, right? They want everyone working so they don't have to work. They're out on their yachts, they're out on the Hamptons, and they're asset gatherers, and they want people sending them their money. But when the VIX begins to rise, the volatility begins to rise, and the interest rates begin to rise as well, the algorithm will pick that up. And more often than not, the markets will turn down. And that's what Nicholas is picking up on. And it will do that. Maybe not as frequently as you would like, but it will. And it's kind of like an accordion. It will expand and contract, contract and expand. Now, the bankers, they make money both ways, and the hedge funds, right? The hedges, right? So they can make money when markets go up. They can make money when markets go down. They'll make a lot more money when the markets go up, though, and it's a lot more fun for them probably, and it's more easier to raise money in that environment than it is when the markets go down. So that's why a lot of times, when you see the markets do go down, and we get into a correction of some kind, they can be short-lived. If it's not a full-blown bear market, it can be short-lived, and they get these V bottoms, and they go right back to business as usual. They take all the bread away, and now bull markets historically will last 5, 6, 7 years, 5 to 7 years. Bear markets historically, over the history of the U.S. markets, will be anywhere from 12 months to 18 months. However, really since '08, and I think a lot of it's got to do with this quantitative easing and the role of the central bank, the I had a thought here, and it eluded me there for a minute. Lost my train of thought, where I was going. Oh, on the bear market, the bear markets have been short-lived. They can be like just a matter of weeks, like a few weeks. We go down 20, 30%, and then boom, V right back up. So a lot of times we get a V bottom, or we get these rounded tops. But that doesn't necessarily mean you got to be careful about developing the muscle memory that that's the way it's always going to be. No. In fact, I mean, you don't want to have muscle memory on, I don't think, this is just point of view, on anything in the market that's it. Like, I'm only going to buy Bitcoin and I'm all in on Bitcoin. I don't think that would be a good idea. I mean, if you've done it and you've done great, hey, hallelujah. But certainly, I would begin to hedge and diversify a little bit. But I wouldn't necessarily do it even, with gold or with anything. Because if there's one certainty in the markets, things change. That is a certainty. Things change. Circumstances change. And you want to be adaptable and versatile. If you are not, that isn't your makeup, and you can't adapt to that, you may struggle, and market trading may not be for you. I hope not. I want everyone to do it, but it may not be. If you find yourself that it's going to be super. I mean, we're structured, we're disciplined, but I don't use the word structured too much because we do need to be versatile, adaptable. I think is probably a better outlook. That makes sense. Now, this market, what it's done here in the last few months is almost tacked on, what about another 25%, right? I am having an out-of-body experience when it comes to the .com. I really am. It's very, very similar. It really is. And now we made a video last night. If our members haven't seen it, you're going to want to. We talk about the divergence of the percent B, right? That signal and that tool has paid us quite well over the years, and So you do want to pay attention to that on a daily basis. And we are seeing that divergence. Now, this August can be, the doldrums of summer. It can be very, very quiet. It can be. I hope it isn't, but it can be. But we have seen some Augusts that have been very volatile. At the end of August, we've got the J-Hole meeting out in Jackson Hole, and they may be making some noise there. And then historically, September is usually kind of a bad month for the markets. And there's all sorts of speculation as to why that is, but I think the biggest reason is that a lot of the hedge funds, they have a fiscal year. They're not on a calendar year. And a lot of them, their fiscal year ends when? In October. And they want to book their profits, the little bastards. They want to book their profits. They want to make their bonuses, and that's what they want to do. And so a lot of times they will take their profits, and they can start to do it in into August and into September. It can, and then they'll come back out at the end of October after they've banked it all, and then they'll come out and say, "Oh, it's nothing. It's just a little pullback. Everybody, get back to work." Go to work, get back there and start sending us your money again. And then they move from the Hamptons and Nantucket, Martha's Vineyard out to Aspen, and in these homes. A lot of money in this world, kids. It is staggering. I don't think we can have any idea. It is staggering. In real estate wealth, in market wealth, and they're doing, at the moment, you never know, but I mean, at least here in the States, they're out there. Now, we weren't going to any fancy restaurants or anything, but we drove by some, maybe on our way to our hikes and stuff, and at least the American people I didn't see any signs of other than maybe the poor folks who had some hurricane damage up in North Carolina, those poor folks. But from an economic standpoint, an economy standpoint, it looked like everybody was, that I was seeing, looked like they were thriving. Big families doing a lot of different things, which is good. Which is good. Don't but it is going to be interesting, and Trump, has done this tariff thing, taxing outside the U.S., and he's talking about all the money that it's bringing, and trying to knock down the deficit. I don't know, kids. I mean, he's the best we got right now, but I think a lot of that is bullshit. I don't see them paying down the deficit. I just don't. They're not going to apply it to that. And when you start doing that tariff thing, that tax thing, companies don't pay taxes. Countries don't pay taxes. The consumers pay taxes. So if he's charging countries taxes, and companies or foreign companies, it's going to be the American consumer that pays that tax, one way or the other. So it may not show up in the economic data. This is just my, we don't trade on this, we don't invest on this, right? So don't let me annoy you. But it will be interesting, right? We're around this day in and day out. So it'll be interesting how the parlor game plays out. But I tend to think that this time next year, anyways, if not sooner, the American consumer may not be terribly happy with Trump. They may get tapped out, but maybe not. I don't, it seems kind of Teflon-ish, right? Everything kind of skips off of them, but I don't know, But again, we don't, this trade here that we have on, it's on because it's doing something specific with the money flow on what it is doing right here, right now. It's got nothing to do with any of that, does it? When we're trading intraday, when we go out further from a few days, but particularly a few weeks, few months, well then, or a few years if we're going to be investing, then we will use technicals, and then we will also want to use a little bit of fundamental. We will. And when we do discuss that during Q School, when we say fundamental, it isn't necessarily the narrative, but it gets down to like the earnings. Did you see? I guess this company. I haven't bought any of the shares, and it's fine. I mean, maybe it's going to go higher, but this Palantir, I think it's what PLNT, PLTR. I think Palantir. They said that its earnings per share is like 650, 626, I think 630 earnings per share. Now, the way that equates is that if a company has a PE ratio, and I'm not saying that that's how one should, invest. I don't, right? Not a value investor per se, right? I mean, these things can keep going. They can go, from a third historical PE ratio, on the S&P is like 18, but they can, but stocks can go from 18 to 30 to 100 to 200, 500. It's just a metric, and they can just bid the damn thing to the moon. I mean, they just will, right? If that's what they want. But the idea with a PE ratio, if you liquidate the company, if you liquidate all of its assets and its earnings, and you were to pay out that as a dividend to the shareholder, the PE ratio tells you how many years it would take you to get your money back. And it'd be like 600 something years. I mean, it's ludicrous. It's ludicrous. But, I'm not arguing. Please know that. I'm not arguing at all that folks shouldn't, buy something because of a PE or because it's in a bubble or anything, because you can make great money in a bubble. You can make tons of money in a bubble. You absolutely can. You can make tons of money in a bear market too, and you can make tons of money. The trick is, you got to get it in the boat. You got to capture it. You got to get the fish. If you catch the fish, you can't say, hey, I caught the fish, but I didn't get him to the boat. You got to get him to the boat. You got to get him in the net. Now, if you go do something with it after that, you eat the fish, you choose to throw them back, you use them for bait. I don't know. That's up to you. But if you got all your money in Bitcoin and you've made a boatload, good for you. Good for you. But you do need to capture that profit, that value, and hopefully do something with it. Now, I'm not saying when you should do that. I mean, we get tools that will tell you that. I would never be so presumptuous to tell anybody that, right? I don't know people's circumstances, right? That makes sense. But I am reminded of the .com, because it was in 1999. People were saying that the .com was a bubble in 1998, 97, 98. I do remember. And then 99 was crazy. Then there was a little bit of a turn down in August. I've described this. And then in the first part of 2000, the market just went straight up, a lot like this, and tacked on like an extra 25-30%. And it even had me like, shit, maybe this is, maybe this isn't going to stop. But I didn't redeploy. I didn't. If I got it wrong, I got it wrong. Like, yeah, we'll sit out, but I didn't redeploy. I would not. If somebody came out of the market in the last few months and then saw this, hey, it is what it is, but I wouldn't redeploy up here. No, no, I wouldn't. Nope, not long term. Nope. Even if there's tax on another 10, 15%, I don't think it is, but I wouldn't. I wouldn't. Let's look at the daily view. Let's do this. Let's put the VIX here on a daily. We do that. All right. So the VIX through the eyes of Swing Machine, 53 days ago, on May 13th, it signaled to us, to our monthly members, to our annual members, that this bitch wants to go up. I don't know why. Don't answer why, but that's what it wanted to do. Okay. And what, Don? All right. This VIX is really indicative of the S&P. So let's put the S&P on a daily. 57 days ago at 5 p.m. on May 7th, Don, the S&P was already moving up. Yes, it was. So you may have been a little bit jaundiced and said, hey, you know what? I'm going to wait 4 days. So maybe you wouldn't have all of this profit. But if you did, and then, so in this instance, the VIX did not lead. It lagged. The market started up before the VIX responded. Maybe because people probably didn't, the market didn't trust it, didn't believe it. That's, would be an interpretation. Didn't buy it. But then 4 days later, on the 13th, the VIX said, yeah, it's for real. We're going. Let's leverage up, boys and girls. That's what they do. But when they leverage up, they're talking thousands of contracts, hundreds and hundreds of millions of dollars, billions. These kids, that's what they're doing. That's how they get to build those big buildings in Chicago and in New York. They play for keeps, man. But the signal has generated a 12% return from the entry price to where we are now. If you had put on one mini, and you're still in it, there's no reason necessarily to come out. If you're still there, you're up 35 grand. If you had done a micro, you're up 3,500. If you had done 10 minis, you're up 350,000. If you did 100, now you're up 3.5 million. Right? Or even more. Maybe it's a 35. You'd be up a big. And that's what they've done. Before we leave this, though, look at where the VIX is on the fear and greed. It's at 30. I gotta sneeze. It's at 30. It was at 20 or 10 yesterday, so it has come up a little bit, and the market has come in ever so slightly. It was up here on 80 and 90, got a little hot, like the Tampa weather, and it's pulled in a little bit on a daily. The NASDAQ also has its own VIX, I believe, but we really kind of key off the S&P because the S&P and the NASDAQ will go together. But so while we're here, let's put the NASDAQ on a daily. 60 days ago, on May 2nd, it goes long. One mini contract, $61,000. You made $1,000 a day. No, it wouldn't come out evenly like that, but 61 grand. A micro, one micro be 6,100 bucks. 10 minis, 615,000. Now I know what you're thinking. I do. And that is, well, that's easy for you. It's easy. I know it isn't, because I understand when you see that kind of money, you, if you're not trained and haven't, flown the plane for thousands and thousands of hours, you could start to react not just to the losses of the drawdown, but you start to react to the money. Like, holy shit. I'm up 20,000. I'm up 30,000. I'm up 40,000. I'm up 50,000. I'm up 60,000. And you start pulling levers and taking things off based on the money. Can't do that. Maybe around the edges a little bit, but not a lot, right? Not a lot. Well, like, playing the game of golf, and then only in my mind, thinking about playing, I'm not ever going to be a professional golfer by any means. But in my child's mind, would have maybe dreamed of such a thing. You've got to have, your emotions in check, under control, right? Makes sense. But if you had done a ton of them, it'd be a 610 grand, be a beautiful thing. And of course, we can drop it to a weekly, and you can even see that. Let's do that. Let me just see. Let's go to a weekly. I haven't done that in a while. So it's been 5 weeks. 5 weeks, the VIX has been trending down, which means bullish. That doesn't seem. Let's see. Wait a minute. 5 weeks. Yeah, I guess so. Yeah, that's about right. Didn't seem right there for a minute. And let's put this on a weekly here, and it's been 10 weeks going back to May 30th, 22 grand on a weekly. So you can, as we go further out in time, we will reduce our leverage, though, right? So that we don't get sucked into that emotional vortex. If you increase your leverage, then controlling your emotions becomes even more and more difficult. The numbers are bigger, and I can certainly do that, and I choose not to do that because I know. Now, if you're trading for a hedge fund, which we are not, right? We're not a hedge fund. We don't manage anyone else's money, but but those boys and girls that are trading those hedge funds, they just add a bunch of zeros to these numbers, but they have to separate, they have no emotion. I mean, the best of traders, they can't possibly. Of course, they're very well paid, and their job is on the line, their performance is on the line. They're going to have the stress of that, but they won't have, the even though they're trading much, much bigger, they won't have the stress that maybe a new trader might have that is trying to trade the money. It makes sense. So our program is still running. I'll answer any questions for anyone, and we'll let you watch. We'll see how this trade plays out. Right now, it's had a run up of those, and I was a little late putting it on. From where I put it on, it had a run up of 310, had a drawdown of 480, and but she's still running. And as you can see here, and I can only describe this to you, or you can see it, um, when you're trading can slow down, get disciplined, and you don't react to being having a drawdown of 480, or you're watching lines on the screen, or you're watching, sometimes, those charts, we do use charts, we do, and the programs use the charts and everything, but if you're, sometimes, not always, right? Nothing's always, so I'm not, but sometimes, you can get chart blindness. Sometimes those, staring at a chart and seeing, you begin to see things that aren't really there. Sometimes, you just have to say, hey, but, that was 5 micros. Had that been a mini contract, the drawdown would not have been 480. The drawdown would have been like 960, almost $1,000. Uh-oh. Uh-oh. Now the run-up would have been, 620. But if that kind of leverage does that type of visceral response, draws out a visceral body emotion, then you trade. You certainly, this one check, you're trading too big. You're trading too big, right? And this is all relative, right? Um, so we're kind of easing back in. We have members that trade in much bigger size than me, right? Much, much bigger. They do, but they're in a different place, you know. So it's all relative, right? And you want to find your level and make it commensurate with what you want to achieve and what you want to do. And as long as you're getting done what you set out to do and want to do and understand that, hey, who cares? That's up to you. That's up to you. But the moment you start, leveraging up and if I put on 10 of them, I'd have 17,000. Well, yeah, you would have, but what kind of a draw would you have had to have experienced? And what happens is if you over leverage and then you get that draw, then you take the loss because it gets, and then you're down, and you don't want to be doing that. Then it's like, honey, I got to put more money in the account. You don't want to be doing that. Right? So you got to work through that. We will work with you and intellectually discuss that and show you and give you hopefully the tools to set up so that you just work through that. And then once you accept it and you just start getting into your routine, and it can be a rinse and a repeat. We have dozens and dozens of things, but you don't have to use dozens and dozens of things. You might just use one or two, and then just rinse, repeat, repeat, and rinse, and just that's all. As long as you're getting done what you need to get done. We had a note from Daniel the other day, and he showed us. I got to get a picture of it. I want to maintain his privacy, but an equity curve over a few months, just this beautiful left to right. It's not perfect, straight up, but it's damn near perfect. That's his equity curve. That's his account growing. Like he's like, he's in a beautiful place. Let's go take a look at the options club selector. Let's see. Now I've got to, as I get settled back in here, we've got to resize our screens here, which we will. But so this is going to be a little bit out of sequence here. Let's see if I can show you. So I'm going to sort this. So here are some option opportunities being presented. Here, these are the stocks right here. suggesting a call option on UPS. Now don't rush out, and try to do this like in 5 minutes and get a 3 day. These are options, over 35 to 45 days. The options that we love to do are put credit spreads. So something like this, Avalon Bay, a put credit spread for 35, 45 days, like around 200 or so. But on the dark side, so these were all being presented last night. You can see some of them have already pulled in. Well, we said this is crazy, right? So Chris is here. We may have some other members that are here. Here's VeriSign. Now, do you see it's said buy a put? You see it's trading down 30 something dollars here, but it suggested to buy a put like 2 days ago when it was up well over 300. I think it was like 350 on that thing. Now, if you had bought a put a couple of days ago on VeriSign, you'd be up quite a bit, probably about 10 grand. You'd be up quite a bit. That's where it came from. I'm not sure how to buy it now. I wouldn't buy it now, but it was there, and that's what it shows, the phantom vignette, that it's moved down. Let's see some of the others that, let's see. So it's also suggesting, this is on Glaxo. Let's look, we got any big fat ones. It's also suggesting a put on AMD. Let's see, let's see if we can do this. We'll scroll down. I'm sorry, I got some writing, so this isn't, still got quite a few here. I think Amazon was in here too. Amazon was looking rather ripe for a pullback. Yeah, it's not there any longer, so it probably already has pullback. These are all defined options. So this is how we get them. While we're here, who's getting hit hard? PayPal got hit. Caterpillar's getting hit. UPS getting hit. UPS, as a shipper, you have to wonder, like, well, what's that all about, right? Did you see the meme of the kid online? The kid orders, his mom asks him. He's a little boy of about like 5 years old, 5 or 6 years old. He ordered a train set from Amazon. Imagine that 5 or 6 year old kid. He got on the computer and he ordered it. So his mom is confronting him, if you've seen it, and it's a big, beautiful box. I mean, I would have wanted to buy the damn thing. And so she's like, "Did you order that? Did you do this?" And then she asks him the question, "Why would you do that?" You know what his comment was? "Amazon loves me." I thought it was great. Amazon loves me. He's probably been ordering a ton of shit. They've probably been paying for it. 5 or 6 years old. You got to see the video. It's hysterical. Amazon loves me. We got some neighbors in here. Here's Goldman Sachs getting up $727. Unbelievable. A share. All right. So we're going to go back, though. Just wanted to give you some ideas. We'll go back. So if we had in this instance, I don't know where it's going to go, right? But if I had reacted to the fear of losing money and I took off the trade when I was down 480, I'd be down 480. I'd be like, oh, dang, I should have and I would have, and I'd be beating myself up. I wouldn't be learning anything. I'd be trading greed and fear. And that's a horrible way to go. It just is. You can't play golf that way. You can't hit a baseball that way. You can't play football that way. You can't play any sport if you are fearful like you're doing that. You can't. You can't do a good job on whatever your job is, whatever that is, if you're fearful. My day-to-day job back some years ago was, as you guys know, was going into surgery. when I first went in there, literally into surgery, right? Now, I didn't touch a patient. I didn't go in there, but when I first went in there, and I had given my notice for another, I was working for another company, business, and I had given my notice, and I went to work for a surgical company, and they brought me into surgery. I had no idea of what I was getting involved in. I went in, and I started to pass out. I didn't have a cell phone. I couldn't call Susan. You know, it was like my first day, and I had to leave the surgical suite by myself. I went into the restroom, and I'm like, shit, what am I going to do? And I splashed water on my face. It was awful. It was an orthopedic case, and the guy, I just, you know, um, I didn't even know. I guess I thought I was going to go into surgery, and I thought it was going to be cool. But when I got in there, I saw them make the incision on the leg. They peeled back, and they were putting in the total knee, and he started hammering on the bone, and the bone chips are flying, and I was gonna pass out, and I went into the restroom, and I am in my scrubs, and I got a decision to make. What am I gonna do? What the hell am I gonna do? And now I'm thinking, I gotta call the old boss back, and will he hire me back? Or I gotta splash water on my face, and I gotta change out of my scrubs. And I was with another person who was training me, and I was just gonna change out of my scrubs, get in my business suit, and leave, and go home. I can literally remember that day. It was shocking, and you talk about fear. I didn't know what to do, and I splashed water on my face. I said, well, I'm gonna go back in. I didn't feel good. I didn't feel good. I physically didn't feel good. I walked back into the surgical suite, into the surgical room. The surgeon, I tell the story. It's a true story. I can tell you that the hospital, it was down at a hospital, big, 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 big hospital down in Fort Lauderdale, and and they're all laughing. They're all laughing. The surgeon is laughing. His private nurse is laughing. The rep who was training me was laughing. They were all having a good time on me. And I'm like, what's so funny? And they're all like, well, and I don't know who won the bet, but they were all taking bets. Was I coming back or was I not? I think the surgeon bet against me. They were taking bets that I wasn't going to come back in. They had done it before. And I came back in. And so it was a hearty har har. I still didn't feel good, but I got it. And then the circulating nurse came over and said, Don, she goes, let me give you some advice. First thing is, make sure you have a good breakfast before you come into surgery. I'm like, okay, which I may not have had on it. Don't stare, that's my Boston accent, at the surgical site when they make the first incision. That you may find that uncomfortable. So don't do that. I'm like, okay. I was probably pale as a ghost. And she said, and don't stare with your eyes at the surgical site because they got high intensity lights. This was an open procedure where they actually, and your eyes will dilate a little bit, if you're uncomfortable. And then if you do feel faint at any time, it's okay to go over and sit down on a stool. But whatever you do, don't fall face first into the surgical field. I'm like, okay, okay. We got through it. I got through it, and I had to go in it the next day. Years later, I would be teaching orthopedic surgeons how to do that procedure. Go figure. God, I mean, I I don't know how that ever happened, to be honest with you. I mean, but if I had quit or if I had run, I don't know. I guess I'd be, selling. I would have been selling copy machines or something. I don't know. I don't know. There are techniques. to doing your job. I'm sure you guys all have great careers and all have different things or techniques, and you can learn from other people. And I certainly learned, and it's just amazing, amazing how you can take these different paths, and they can lead to some amazing results. Surround yourself with all those people that were in that surgical suite. By the way, they were all very, very good people, and the trainer was very good. They were all very, very good people, including the surgeon. And I didn't take it personal that they were laughing at me. They were just having some good a good chuckle. It actually kind of made me feel better. Jesus, car just flew down the road here. Um, what was that? Um, we live on a quiet street. The car was racing, but so the same thing, with trading, right? You really, really got to get a grip on those emotions, right? And we will try to help. We will help you. We'll describe it over and over and over again and techniques to do it. And when you do it, I think you'll look back and say, "What the hell is that all about? What was that all about?" It's just human. It's just human. It's all the same, folks. Any questions, let me know. The program is still gone. That's got 5 micros up there. 5 micros. And yep. Let me look and see what other stocks are doing so I can give you some ideas. Um, if I'm looking for some long opportunities, if I am trading longs, I'd be looking at Charter Communications, CHTR. I'd be looking at Intel. I'd be looking at Comcast. If I'm looking for some short opportunities, I'm going to be looking at INCY, INCY. I'm going to be looking at Cadence Software, CDNS. VeriSign, that was about 2 days ago. And we did do a video. So this sucker is trading at 280. Boy, I'd have to look at a chart. It was like 2 days ago, right, guys? It's down $26 today. I think it was up around 350. I mean, that a put option there that would have paid several $1,000s. Um, Still got more room to go down. Let's see what other. I think AMD. Now I don't know if they get earnings. You got to be careful with any of these have earnings. But AMD is looking rather ripe up here. It's been pretty strong, but might be looking for the pullback on AMD, trading up here around 178. Amazon, same thing, pulling back a little bit today. What else we got here? Let's look at the interest rates. Interest rates, you talk about, curve rate control. And the VIX is still really muted. There's not a lot of concern. Yep. So we're profitable for the week. It's small, but we're profitable. We're okay, and I hope you are too. That VIX, though, does look like it wants to pop. I don't know what it's going to be, but it does look like it wants to pop up in a big way. And if it does, she's trading at down, below, looking at the VIX futures, down around 1750 or so. If that sucker ever moves back above 20, you're going to be looking at about a 5 or 10% correction in this market. Very, very handily. Yeah, our option tool is suggesting a put credit spread around Intel at around 2040. So that could be kind of interesting. Suggesting a call option on CMG. Suggesting a call option on Otis, Otis Elevator. On the hourly view on Swing Machine, we are getting a short signal in the last 2 hours on the ES. On the hourly, the NQ is still dipping. It's still long 91 hours ago, but it is dipping. The Russell is short 3 hours ago. The VIX is ripping. It's coming up. So the market on an hourly basis, it appears to us that it is trying to pull back. That's where it'll manifest itself there. But it may dissipate, right? So don't come in with, you know, a boatload of money and I'm going to short it and I'm going to, don't do that, right? That's not what we do. It's not what we suggest, right? We want you to be here forever. Something you can do, into your 90s, right? I also want to look at the American dollar. The American dollar has been short against the other currencies, and it really strengthened. And why would that do that? Well, if they're starting to roll out, they'll go into cash. So let me go get this. I want to look at the American dollar on Swing Machine. I'll just share this with you. Let's go get it. Bear with me. Well, it's still in a short signal. It's ripping, it's coming up. It's trading at 98.68 thereabouts. And the euro is dipping, trading at 1.158. So we'll be watching that. If that American dollar continues to rally, then we might want to be long the dollar and short the euro. Not quite yet, but it's looking better that way. Gold went long 138 days ago. It's just a dip right now, just a dip. And if you had put on a mini contract on gold 138 days ago, you'd be up 54 grand. Just one. Not a 19% return. That would work. That'd be nice. Silver, 47 days ago, you'd be up 21 grand. Copper, 40 days ago. Oil, 37 days ago, you'd be up 7 grand. Heating oil of all things, long 37 days ago, it's up 17.88%. You wouldn't think that, right? Nat gas is short, up big. Unleaded gasoline is trying to get long. That could be interesting. On a second, giving you another bite at it. Crypto. Swing Machine went long crypto 67 days ago at $96,000 a coin. It has generated a 22% signal call. It just is what it is. I mean, I can't make that up, right? It is. You just settle in, decide what it is you want to trade, have your, ideally 5 to 7 markets, have your, your basket of euros, your basket of dollars, and just play your game. Can't, you don't want to put it all on one necessarily. Now at 1 o'clock, we're going to need resources and need to turn down. If you have any questions that you want me to answer, or you want to look at any stock, if you want me to plug in any stock or any market into Swing Machine, look at when it would have gone long, when it would have gone short, um, and get and have us drill down on it, I'm happy to do that, right, over the next several minutes. So just let us know. Chris, thank you for stopping in, and Triplet as well. And we're still pulling for you. If you still have your shorts on, and it's been a it's been a stubborn one. It just is. But the market does look to us to be fatiguing. It does. We are seeing some divergence in the momentum, and momentum, or the lack of momentum, can and many times does precede the a market turn, as opposed to if you're watching volume and so forth, we don't pay much attention to the volume, but the changes and divergences of momentum on a day, at least a daily basis, appears that it certainly is ripe. So I hope for those of you that are playing it that way, I hope you get it. We will be taking a hard look at our some option opportunities on the S&P, maybe even the Nasdaq up here toward the end of today as we settle back in. But we're going to just kind of move in gradually as we come back as well from a little vacation. Any questions, you let us know. Again, for everybody else, we thank you for stopping by. Encourage you to visit the site. Encourage you to give us a call. The volatility will come back. It will. Those of you that know that have been with us, when it's rocking and rolling, it's wonderful. And I'll have to remind everybody, it's like, well, we gotta, we take full advantage of it when it's doing it, but it won't last forever, and then it'll compress, and the monies may not be as dramatic or as quick, and it seems to compress for a little longer period. On the buy side, that it seems like that's been the history of it, but that can change in a full blown bear market. A full blown bear, it can last. Now this bull market's years long, so a full blown bear market, they've been very very short. Even '08 was short, but the next one could last for a few years. It absolutely could. And the volatility, and you can get vicious rallies in a bear market too, by the way. You can, just as you can get vicious corrections in a bull. But if anybody's got any questions, let us know. Otherwise, in a few short minutes, we're going to have to bring this view down, and maybe we'll look for you, hopefully, maybe tomorrow. Okay, everyone. Again, I just want to say thank you. This is on a timer, so it will time itself right out. Be sure to reach out. Until next time, have a great afternoon, everyone, and we'll see you before the week is over, at least, right? Have fun, everyone.